Guys, welcome back to another video. It's been a long time since I've done a chart analysis on Bitcoin, as I normally tend to do analysis and breakdowns on more forex currencies. So today we're going to go through Bitcoin. We're going to go through some fundamental analysis and some technical analysis, and what is my analysis and predictions ongoing from today onwards. Now we're going to start with the weekly time frame to kind of I guess work our way down. This is more of a top-down analysis. But before we get into the charts, please, like, share, comment, and subscribe to the video. To the video, and check out our contents below. And I've got some tutorials, I've got some breakdowns, and I've got some, you know, videos that can help both beginners and advanced traders. So yeah, please like, comment, share, subscribe. Before we start, we're going to go through some fundamental analysis. And when I say fundamental analysis, I mean fundamentals that can impact or that show where we stand currently for BTC in terms of the whales positions that they're taking so far. So as we can see here, these are the fundamental analysis that I'm talking about in terms of the positions that the whales are taking on Bitcoin. So far, and normally we tend to use non-commercials positions to tell um, the differences or in the market in terms of whether the market is looking bullish or positions overall looking bullish or bearish based on current positions of the big boys or the institutional traders, as we call them. So yeah, so as you can see, just going off numbers here, we have 10,000 plus long positions in non-commercials, and you have 9,000 plus positions in short commercials. Now, these numbers are good. These numbers are tend to be the numbers that we focus on for long term. Why? So that means in the long term, Bitcoin is very bullish from the perspective of non-commercial traders, which is a good thing because it means that they believe that prices of Bitcoin will appreciate in value over time. Now, this is where us traders or day traders tend to focus more on, which is the changes part. So the changes part is the part where it shows the current from week to week out changes that are happening in the market so far. Now, because we know the long term wise is bullish for Bitcoin, however, there are positions that are added almost every other week to see, obviously, to accumulate to get to this figure here that we have 10,000 plus here. So on a weekly basis, we can see the last week changes came in at 69 plus positions of long positions was added to Bitcoin. Now, this is where it gets interesting. And we can see a total of 180 plus short positions were added to BTC from non-commercial traders, which it tells me that as of on a weekly basis, so as of last week's current COT report, it looks like shorts are much in control of the current market. However, even though long-term wise, we believe that Bitcoin will appreciate in value in terms of price wise. But based off current non-commercial positions, shorts have the upper hand in terms of control of the market. So now that we know this data, which tends to comes out every other week on a Tuesday, as today is a Monday, so it's bank holiday across the globe. Well, for most Western countries, I guess. So yeah, these are the positions that we tend to focus on. These numbers are very important, especially for day traders, because we're focusing on day in day out trades. So therefore, we focus on the weekly positions that are happening by these institutional traders or non-commercial traders. And the reason why we use non-commercial is because of the fact that non-commercials tend to be basically in the market for profits rather than just using the instruments for hedging against their assets or whatever other big institutions use, cryptocurrencies and other these instruments use for, reasonable purposes. So yeah. So now that we've broken down fundamentals, we're gonna dive back into the charts and see how this can mean or benefit the charts in the long run, or in, on a weekly, on a daily time frame. So now we're back to the charts. Okay. So as we can see, first of all, we can see that, you know, we're currently in a bearish structure, meaning that, obviously we do have a bullish structure in terms of price. We have a, high, high, high lows, high, high, high lows. However, this is where it gets very interesting because of our fundamentals are showing that we have a incoming bearish short positions from institutional traders. This is where it's very, very important to understand the market to a advanced level so you can, mitigate and avoid any losses based on simple understanding of trading, especially from a smart money concept trading perspective as well. So at first we can start by here. So this is the last buy candle before price really pushed down, taking out all the stop losses below this area here. So this was the last buy to sell candle. This is the reason why we highlight this area as a very, very important candle that we use to measure um, last point that price had buyers had control before price pushing down to clear out all the liquidity or all the imbalances that we can see below this price point here. So that's number one. Now, because we've identified this area, what has happened now? Now price has come down to this area here. So we can see that this area on lower time frame probably show a bit of supply and demand support here. Now, what this happens is price has come and taken out liquidity because here we're on a smaller time frame, like 1 hour dailies, will have stop losses below this area. So then what happens is that price has taken it out beautifully, cleared out all the stop losses below this area in order to create liquidity to the upside, which what market does in order to get more positions. And and so obviously once it's cleared out liquidity here, cleared out all the stop losses below this point, what happens in the price is retrace back up to the buy to sell candle that had the last buyers had buyers in control before price pushing down. So this is just a quick breakout for us to understand how the market really works in terms of manipulating using liquidity and understanding imbalances and efficiencies and inefficiencies in the market. So now going on a daily time frame, you can see, okay, so on a daily you can see that price, buy last buy to sell candle here has been mitigated already. Now, so we can see that as we see here, this is a very bullish structure here. So buys, high lows, high lows, high lows. But once price got into this zone, we can see that because we have a high lows, high lows, high. What we see is a change of character, meaning price has closed below this point that caused the break to the upside to our point of interest or to our supply zone. So normally when this happens, we call these areas, we label this as a change of character, meaning there's a change in price's behavior. What that means is that normally tends to mean that there's a change of the market structure that is going to happen for the charts that we're looking at based on the time frame. Now we can see that price has shown a sign of clean break off the last swing low before creating a new high, breaking past this last high here. So now we've had a clean break. Price has come down, retraced and tested that last again buy to sell candle here. Again, it's very, very important to identify these candles. You know, so it says last buy to sell candle, which caused this price to break below this swing low that causes the swing high. Again, so we can see that this is price have done that again. Now, as a confirmation is what we have here, meaning that we have a full confirmation that now bearish, you know, sellers have taken full control of the market because we've broken past this swing here. So once this happened, we label this area as a break of structure, because now this gives us a full confirmation that sellers are in full control. And as you can see, the fundamentals did, you know, in which fundamentals does collide or aligns with our technicals analysis so far. So then we could then highlight what was the last candle that caused the buy before the sell, which broke and cleared out all the liquidity below this area. So we can see it was this last candle here. Now, because now we know that bears are in control of the current market sentiment. Now we need to identify that where will be the next area that price would likely retrace to before we can see a continuation to the downside to our next our next demand zone in this market structure. So we can see our next demand zone will be this area here. So we can highlight that as unindicatted order block. This one as well. So order block here. So these are the areas that would be very, very important for us to be looking at and paying attention to understand. So therefore, we go on a 4 hour. Again, this is a top-down analysis, and so our area one will be here, and then area two will be somewhere here. So these are the areas that we will be looking at and waiting for market reaction in terms of anything that we can see, price showing signs that there's a confirmation up. So this makes it much more clearer, much more makes sense now. So now from whatever happens in this area here, we're not interested because we know this is just a manipulation area. This is just a liquidity zone that, you know, the higher whales are used to grab more orders so that they can fulfill, the market. And then the true continuation of the market structure will happen once price is either goes to this zone here and trades to here, or price does break to this supply zone and then comes to the downside. So this is how we'll normally expect the market to play out based on the weekly, daily time frame and with fundamentals to show that sellers are currently in position as we speak. And we can have our take profit normally at this level here. So we can have a take profit here. And these are more of a swing trading position. So you would normally be in this position here for quite a while because, so for example, let me just correct that. Yeah. So let's say we had our sell trade here. This will be here. Take profit will be here. Back to our, equal lows. And obviously, this is a perfect area to take profits. Obviously, you can, scale in within these areas, based on whatever time frame you choose to enter your trade. But, this would be a nice area to take profit. And if price looks that it has a strong momentum, then obviously you can continue to the zone here, and which will be this candle that we have here as demand candle, or in other words, these candle here. As you can see, a little bit of what we call it, a little bit of efficiency going on here, and then we have a cute, nice imbalance here. So therefore, this will be a nice area of take profit to, put your take profit level at. Nice entry stop loss right here, or you can choose to go to this place for entry, take profit, and stop loss just above this candle so that price can breathe and avoid any spread taking out your positions. So this is my take on BTC. Let me know what you guys think in the comments. Please like, comment, share, subscribe. Been your boy Oil Capitals, and we out.